I think the key trend is we've got more demand but also new supply. Supply is the new ingredient for the market in 2016 because we've got some people that are ready to take profits, some people that are ready to move up the risk curve. So we're definitely seeing more supply coming through. However, at the same time, we've also got a lot more caution because of the number of global and local issues that investors are having to face. That means that they're looking very carefully at each asset, at each market, before deciding what are the risks they want to take. So it's a very interesting market at the moment. I mean, you're seeing some investors move on, so we've got a changing of the guard, if you like, of who's buying and who's selling. But there's definitely new sources coming through from all regions. Some of it is the same country, but it's moving on to a different level of investor. So some tier 2 insurance companies, for example, following their bigger brethren into global markets. But no, definitely still new names coming forward. We're past the peak for performance levels, so we'll see steady growth from here on in, we think, driven more by rental growth than by yield compression, but for prime property still a little bit of yield compression. I think the interesting thing is whether we're going to see the same volumes, and the ingredients are there as far as we're concerned, particularly with the expansion of quantitative easing that we saw last week. That's just going to add yet more liquidity to the market. So more supply, more demand. We're forecasting something like an 8% increase in investment volumes to a new record in Europe this year.